Excellent, everyone. Welcome to tonight's live webinar. I'm here with, one of my good pals and actually a relatively new friend, Michael Zanzini from BM Select Mortgages. Michael, what's going on, my man?
How are you, buddy, man? Great to see you. Great to see you,
Yeah,
buddy. I'm
it
excited for tonight.
it's going to be good. And I you know what I'm really happy about is probably, you know, I love the business that we're in because we believe in enriching lives through real estate. And a big part of what we do is we show people how to turn their backyards into cash. But the one problem they have is, JG, this is great. I love the concept. I love what you're doing. I want to be able to do this, but I don't have $200,000-300,000 laying around in order to do this project. And tonight, Michael, you're going to show us exactly how people finance these projects. You're going to show us exactly how they can get their hands on this cash so that they can do these kinds of projects so that they can enrich their lives through real estate. So I'm super pumped. Thanks, man, so much for making the time. I really appreciate it.
I appreciate it. We're going to turn dreams into reality.
Tonight, it's all about turning dreams into reality. You're absolutely right. So, for everyone listening, thank you for watching. Thank you for listening, whether live and recording, streamed later in the on the webosphere, wherever you are listening. I think you're in for a treat because Michael is top notch. So what I'm going to do, Michael, is I figure we're probably going to be at this for about 20, 30 minutes. I'm going to essentially take the next 7 minutes, maybe 5 to 7 minutes, just to set up some context. And I really want to go through the different use cases because when I say coach home ADUs, a lot of people think this is, just for investors, but it's not. This is not, this is way bigger than just investors. This is homeowners. Homeowners have some of the biggest opportunities with this because anybody who has kids, who has aging parents, who wants to create a multi-generational home, anybody who wants rental income, they all can have what's available here. And we are going to show you today not only what the use cases are, but how to finance those use cases and how to tap into the money that is sitting on the sidelines waiting to be deployed. And Michael, please tell me, like, from your perspective, you know, is this just for investors? Can you work with homeowners? Tell me about it from your perspective and the financing component.
Yeah, so I don't want to give away my segment of my presentation too much this early, but yes, this is not something that is just geared towards an investor. This can be done on an existing primary residence to create some cash flow to their existing home. This can be for a person looking to go purchase or refinance with the potential to create cash flow. It is for everyone in between. And what I'm going to show you with one of my programs that we have created, which I will give a little bit more context on, is we want to really fill this void in the market right now of how do you access funds and capital to do these projects. So I'll get into that in just a minute, but no, you are not just limited to an investor, to all the viewers and listeners tonight. This is for everybody.
Awesome. I love it. So, folks, before we jump into it, my name is JG Francoeur. I'm the CEO and co-founder of Visture Property Group, Visture Property Management. We've been in the business now for over 15 years. And essentially, Visture is three parts of the business. We manage a massive real estate portfolio. We manage over $100 million of real estate. We serve hundreds of clients in Peterborough, Lindsay, the Durham area, Oshawa, Barrie, Aurelia, City of Kawartha Lakes, and everywhere in between. And we manage real estate for people like you. It could be a single family home, it could be a duplex. We also do construction, we do home renovation, we do ADUs, we do basement conversions. We do it all. We serve homeowners, we serve investors, we serve them both. And we're in the business. At the end of the day, we're in one business, and that business is enriching lives with real estate. That's what we want to do. That's why we're in this game. And that's why tonight we're going to talk about these four use cases. So let me jump into these real quick and then I'll toss it over to Michael so he can tell us how to go get the money. We like to say, it wasn't just Jerry Maguire who said it best, right? Show me the money, Mike. You're the guy who's going to do that. Show me the money. So let's jump into the four use cases and then I'll toss over to Michael. So the first use case is who I like to say Jacqueline. So Jacqueline is the perfect example. And there's a lot of homeowners out there that are equity rich, cash poor. They want to generate some income. They have a nice house. They love their house. They've been paying down the mortgage. They've owned it for 5 years, 10 years, 15 years. They've built up some fantastic equity, but that asset's not making them money. And they're starting to think, you know what? This thing could make me money and should make me money. And one day I want to move on to build maybe build my dream home, maybe buy my dream home. And the way you're going to do that is by enacting this strategy that we're talking about here. This is where you turn your equity into income, and then you work with Michael in order to finance your dream home. So you take what's existing. You see phase one there? Phase one is your equity rich and your cash poor. You have a house, let's just say rough value. It's worth 550 grand right now. Doesn't make you any cash, doesn't make you any income, but it's worth 550 grand. Now, what we want to first do is invest in building out a basement suite into that home. And you want to turn that basement suite into money. And you could do that with a basement suite. You could be generating well over $2,000 a month, meaning $24,000 a year. And the best part is your house goes up in value. Now, Visture can help you with all of those details and the permits and the planning and the design and all that stuff. So don't let all that stuff bog you down, because that's what we do at Visture. But by investing a little bit of money, which is idle equity in your property, you invest money into your property, you are now going to boost that value from, say, 550 as this in this example up to 725. Might even be more, might even be 750. You then work with Michael and you pull out some of that equity again and you do it another time. And this is where you do phase three and you build a coach home. You build a coach home, what we call an ADU, or a coach home accessory dwelling unit, and then you rent that sucker out. So now you are living in the top of the house. You're renting out the basement. You're making 24 grand a year. You're renting out the coach home. That's bringing in an extra 30 grand a year. That is $54,000 a year of additional income that you can be earning just by adding some rental income into your existing house. Now, anyone who owns a home can do this. It's not, you don't need a special home to do this. Anybody can do this. And Michael, I'm just going to bring you into this conversation. Let me ask you, if somebody makes whatever salary they make and they add $54,000 of income, rental income, to their household, is that going to help them qualify for a bigger, better home later in the line? Like, how does that impact them? Tell me.
Absolutely. Yeah, absolutely. So when you are qualifying for a mortgage or a future mortgage and you are now generating rental income and there's a component to your existing real estate, the banks are factoring that rental income that you are generating towards your qualification as an income. So yes, the simple answer is it helps you. It definitely does not hurt you. It helps you for sure.
Yeah. Now, phase four, which is not on this diagram, but phase four for Jacqueline is you do these phase one, phase two, phase three. And then phase four is you rent out the top part of the house where you used to live, and then you go buy another one. And then you have a choice. You can either do this again and start creating financial freedom, or you just go buy your dream home. And then you have this incredible asset that's now worth over $1 million, that's generating $54,000 a year in income for you, and you move on, you go buy your dream home, or you go generate even more income into the future. These are the possibilities, folks. And again, Jacqueline's not an investor. This is a person with one house. This is just a homeowner. This is possible. By the way, this can work as a first-time homeowner as well. So, Michael, I know I keep bringing you into this, buddy, but I know you don't want to give away your presentation. I get it. But tell me, is this possible for first-time home buyers as well? Just tell me, is it?
Yes, 100%. And we're already working with clients that are our first time home buyers doing it currently as we speak today.
Wonderful. Now I want to show you everyone a few pictures of kind of what's possible here. We've done this with lots of people over time, homeowners that, like, this is an example here of a property we took. As you can see, beautiful brick home, bungalow, very nice, nice side entrance. We end up building a basement apartment down there. You got somebody living on the upper, you build out a basement apartment. Then in the backyard, we build a coach home. We get going. By the way, folks, these coach homes, we put them up real quick. Just over 2 months to build a coach home, Michael. We got it down to about 70 days
Wow.
from the time we put the shovel in the ground, like this picture here, to the time we do the footings and the foundation and the framing. We frame out the inside, we frame out the outside, we finish it, the whole thing, 70 days. We used to take 88 days, but we got it down to 70 days now, so it's incredible. So that's an example of Jacqueline. Now, Sigfried is an example of an investor. And this is something that, yes, we see quite a bit. I know, Michael, you see this quite a bit, but there's a lot of investors out there that have one, two, three, four properties, and they're kind of stuck. They don't know what else to do. They're having a hard time qualifying for new purchases. And one of the things that they can easily do in order to add significant value to their portfolio is they can actually take their single family homes or their 2 unit buildings like duplexes, and they can add a coach home to them, making them into what I call a trifecta. And when you do that, you're adding significant value because every time you take a single family, you turn it into a duplex. A single family is worth, typically in the 500, $600,000 range, 650 in all the markets we operate in. By the time you add the second unit, you're typically bringing up that value to 725, 750, 800, 850 in most cases. And then when you add the coach home ADU, you're bringing up that value of those 3 units to about $1.1 million. Now, think about that. If you have a portfolio of 2 or 3 properties and you increase that all of them to $1.1 million, you're talking about a significant boost in value. And that's what this client did here. He had 5 single family homes, and we're going through the process now of duplexing all of them and adding a coach home to each of them. And this investor in this particular case, by the time they're all said and done, they're going to be generating $35,000 a month in rental income. Plus, their portfolio value is going to be somewhere between $5 and $5.5 million. And right now, their portfolio is under $3 million. We're just about doubling their portfolio value, and we're almost doubling their rental income. Incredible tactic, and you could see like the end result. Michael, you actually saw this coach home. This here is Tower Hill in this example. We do this for investors all the time. Absolutely fantastic. So it's definitely a no-brainer for investors. I think a lot of investors already know that. But back to homeowners for a second. Here's another use case. We have a lot of people that want to help their kids get into real estate. And one of the best ways that they can do that is they can actually take their kids and work with their kids and build coach home ADUs, move their kids into the coach home ADU, let the whole thing appreciate in value. And then what they end up doing is taking some of that equity out and help the kids move on in life, help the kids grow a real estate portfolio. And we call this the Dave and daughter strategy, because we did this for a family where the daughter wanted to, move out of mom and dad's basement, and the best way to do that was to build her a coach home. We did that. Turned out incredibly well. If you guys want to see pictures of that, email us, email me, and reach out to us. Go to visture.ca. You'll see the pictures there. And it was incredible. We turned this idle workshop garage into a 2 bedroom, 900 square foot coach home ADU. And now the daughter lives there. The daughter is now starting to create equity in this property. And her plan is in 3 to 4 years that when the property appreciates, they're going to refinance out that equity. And then she's going to go on and continue to do this again and again. So for young kids, if anybody wants to get their kids into real estate, this is one of the absolute best ways to do it. The last kind of example I'm going to give here is I call this the Leanne legacy story. And this is where a lot of families are trying to protect their legacy. A lot of families are trying to create multi-generational households. And, if you have aging parents, this is a fantastic approach. And what you can do in this example is, instead of putting mom and dad into a retirement home, putting mom and dad, in whatever situation that's going on there, you can build mom and dad a coach home. And we're seeing this time and time again where mom and dad own a single family home, and it's most likely paid off. Most aging parents have paid off their homes by now, which is fantastic. We could use the equity that's in that home to build a coach home, an ADU at the dot, in this case at Leanne's home, and then the parents end up moving into that property. That ends up setting up the parents for the rest of their lives, because they have this brand new, beautiful coach home, 850 square foot coach home that is all on one level. It's got everything they need. It's got all the appliances. It's all brand new. It's got the in-suite laundry. It's got absolutely everything. And that helps them live out the rest of their amazing years close to the family, but in their own space. Now, that's amazing in itself. But then, remember the tactic I started by saying, Michael, the Jacqueline comment? You could then build the parents' home. You could build that into a trifecta. And then what this does is this creates a pension for life for the family. You are going to
100%.
convert mom and dad's idle equity, mom and dad's grass that's doing absolutely nothing, into a trifecta that could generate $7,000 a month for the rest of everyone's life by doing a trifecta. And mom and dad get a brand new coach home that is close to the kids and everybody's great. So, in the end, if you do this right, I could show people how they can creates $9,500 a month in passive income, plus build a family asset of over $2 million using this tactic. Again, this isn't for investors, Michael. This is for regular, everyday homeowners, people that have paid off their homes. Whether you have paid off, whether you have debt on your homes, whether you have a mortgage or not on your home, it doesn't matter. This is applicable. This is useful, and this can work for absolutely anybody. So those are the kind of the use cases I wanted to cover real quick, because I know a lot of people jump to the conclusion of, like, hey, this is actually going to good just for investors, but it's not. And I'll give you an example, by the way, of the Leanne story. This is an example of one of our clients' homes here. And look what we're going to do. We're going to turn it from this into this. And look what you see what happens here right here. This one here. This is just good for the family, right? This first one here. This is just good for the family. The family lives right here. Mom and dad with two kids. Yeah, middle. A teenage daughter and a teenage son. By the time we finish, this is what it's going to look like, and we're going to be having mom and dad in here. Plus, we're going to have grandma and grandpa in here. Plus, we're going to have the sister in here. So it's a multi-generational household. Then with grandma and grandpa's original house, we're going to build a trifecta for them, and it's going to generate $7,000 a month for them in pension for the rest of their life. That's what the possibilities, Michael. But the one question, and this is where you're on the chopping block now, buddy, because I have the strategies, I have the tactics, I can show people how to do it. But the problem they have is, how do I finance it? And that is what I want to talk about next. And I want to let you share your presentation and your screen, because if people can't finance this, if people can't find the money, they're not going to be able to do this. So this is where it's up to you, buddy. You got to show us where to get the money.
Yeah. So yeah, no, amazing, amazing presentation. And it almost sounds too good to be true. Like it's just number. It's like, no, this can become a reality. But to your point, you can show them the options and the potential of the property. Like I said, it can be for an investor, it could be for your parents' property, it could be a first-time home buyer looking to buy with adding future potential to that real estate. The biggest question is, how do you finance this? Well, before I share my screen and get my presentation going, that's always the number one question. Now, you have to understand, what is the traditional route of doing this? A, do you have a couple $100,000 liquid capital? Great. God bless you. That's always the easiest way to go do it. Not everybody does. Okay, next option. Well, can we go and refinance the equity out of our home? Can we get a line of credit? Can we pull cash out? Well, we can't always qualify, or there's just not enough equity built into the property to do this. Well, then the next option is, and I've been doing it for many, many years, is you go get the hard money and the private lending type money. Well, that gets very expensive. Higher interest rates, higher fees, and all of that, where the end result just doesn't look as attractive, and the carrying cost and to do it is just very expensive. And a lot of people get deflated and say, you know what? It was a pipe dream. See you later. You know what? It's not for me. So before I now go into my presentation, I need you all to understand how this program, my Build Up Investor Edge program, came about. My brokerage is the number one team in Canada. We do everything. Just like how JG does everything real estate related on the financing side, we do everything. Commercial real estate, land development, construction loans, residential mortgages, renewals, refinances, private, whatever you need, we are a one-stop shop. But when you work with such a vast clientele Canada wide, there's always been that missing link or that missing void of, we forecasted the market is going to turn into this. You have a lot of municipalities and cities allowing to add additional units. You have investors who want to get out and go and buy. And when you're going to buy for cash flow in today's market, it's tough to do it. So, what was the option to create cash flow? What about the house hacking approach where we can go buy a house, renovate it, add an in-law suite, get some rental income to offset our carrying costs? These are all options that aren't rocket science that have all been available, but there has not been optimal ways to access funds to go and do this. Like I said, do you have the cash? Great. Can we access equity in your funds or a line of credit to do it? Fantastic. But most people don't. Now, what if there was a way to use a financier's money to do these projects? Well, this is what I'm going to unveil to you.
Now, Michael, just so I know you guys call it the Investor Edge program or the Build Up program, but again, just because I know a lot of people get thrown off with the word investor,
Of
so
course.
they don't have to be an investor. Homeowners qualify for this too, right?
Correct. Correct. So Investor Edge isn't our program. Investor Edge is our name to give you guys access to a couple options in our toolkit that we created. So over the last 5 to 6 years, we literally traveled Canada. We went to banks, lenders, credit unions, hedge fund companies, private wealth divisions of the banks. We went to private equity firms. We went literally everywhere, family offices, saying, we have an idea. And our idea with our client base is we want to be able to provide more solutions and options. And we were able to get 5 of our products and our ideas approved. One of them being Build Up, which is the main focus of today's conversation, but I always like to touch on it. If you're ever buying Airbnbs or doing short-term rentals, you're always handcuffed with lending options. I have lenders that can do it. If you are an investor and you're capped with the bank, I have a lender that can go up to 40 doors. I can get you best rate on rentals. And we also do condo conversion. So I'm just giving you an outline to all the viewers and the listeners that even though today's topic is the buildup, I have access that no other brokerage or person in Canada has for you. Doesn't matter if you're a first-time home buyer, you own a primary residence, you're an investor, or anything in between. You need to connect with me and my team because where you're feeling you're getting a door slammed in front of your face, I can open up solutions. But with that said, the buildup, in my opinion, is the one that I'm most excited about because this is the game changer for all Canadians right now. Now, what is buildup? Hold on, give me 1 second. I'm not in my flow right now. I got to fix where you're on my screen and where everything is right here so I can see. There we go. So what is build up? It's basically construction and renovation financing reimagined. What if you can unlock the hidden potential for a property, not based on what it's worth today, but what it can become? With interest rates up, cash flow down, more and more investors are stuck with properties that are hurting their finances opposed to helping. Whether you're living in a home or holding it as a rental, the math just doesn't add up. That's where our build up comes in. Now imagine a program that helps you finance the creation of new units. This can be basement suites, laneway homes, full rebuilds, ADUs, everything in between. And you can increase rental income and offset rising mortgage payments and finally get your portfolio growing again. Just back to JG's point, this is for everyone. And he gave all the examples. 1 sec. Build up. Like we know how it goes. You literally brought it to your broker. You brought it to your bank. You did this, you did that, and you are just getting told no because they're not financing the potential of what it can be. They're financing on the past or what it currently is operating as is. That was a big void in the market right now that we wanted to bring to the masses. Now, when they offer something that's overcomplicated, out of reach, or at higher interest rates, like I said, the primary majority way of doing this, if you don't have the capital and finances to fund 250, 300,000 is you're going to private lenders and it gets very, very expensive with high rates and fees. Well, my build up program flips that script. We do it at big bank like rates without the big bank BS. Now, I need to explain to you very like this presentation. I have to do a lot of reading with the bullets because you guys need to understand how this program works. The mortgage is based on the as complete future value of the property. If anyone has ever heard the term the BRRRR strategy or the BRRRR method and what that means, buy, renovate, you know what I mean? Rent it out, refinance, and repeat. Well, what is the issue with that? You're hoping to God that you are praying for market conditions in 6 months, 8 months, that value is there. You can recoup your funds. You can do all this. Well, before you even do anything here, we're already getting based on the project that you're looking to complete and the existing property. They're already getting an as complete appraised value done. So we are already predetermining your worst case scenario baseline of a value, already getting locked in. You are not subject to volatility of the market. If Trump sneezes and Canada is impacted, like, no. Once you are getting that value, you are locked in. And nobody's to say that you can't challenge it at the end of the project to even see if we can get a greater value, but you're getting that predetermined. That is massive, number one. Number two, you complete the renovation build, cannot exceed 4 units. This is strictly for a residential program. Once you start to get 5 and 6 units and above, you start to fall under the commercial category, which may be another webinar or another live stream talking about that. This is strictly residential. It's interest only payments while you're doing the construction. This can happen on primary residence, secondary homes, or rental property. So back to JG's point, this is for everybody, not just investors. And there is no maximum renovation amount. This can be done for simple renos or as much as complete a complete demo and rebuild. We have done this program for clients where they've literally knocked down and built a complete brand new home on the property. Here is where it gets massive, guys. I know it sounds corny and it's like you're really boosting it up and you're so energetic, Mike, but people need to realize, for anyone listening, if you've ever gone through construction loan financing, if you ever had to deal with lenders and private lenders and hard money on this, for me to say that my program, you can do this with as minimum as 15% of your overall renovation or construction budget. When I say that that is mind blowing and game changing, that is massive. I have been doing mortgages for almost 15 years, and I do construction loans and financing and development projects every single day of my life. The minimum requirement on average is 30 to 35% down of your construction budget to get a project up and running. JG, am I lying here? You've been
Uh,
around the block, my man. That's
a
usually the
hundred.
standard.
Well, listen, in fact, you're 100% right. And I was going to say, like, most of the time, I mean, 35% is really the bare bones. I mean, if you can get 30, you're lucky. This is half of that. That's incredible.
And this can be from borrowed funds, personal funds, even gift from mom and dad or immediate family. As long as we can show that you have 15% of the construction budget, we are off to the races. Now, this can happen on purchases and refinances. And I'm going to show you the example on all this. This doesn't necessarily have to happen on an existing piece of real estate. This is you going out to venture out into the market with your real estate agent to go and find a house that has the potential to go and do this. Qualification is based on the total mortgage amount at the end result. So as complete value, and construction must be completed in 6 to 12 months. On average, that's usually what it takes. JG gets it done in less than 70 days. Like, there you go. Like, it's absolutely nuts. But that is kind of how this program works. Now, Michael, enough talking. Too much energy over here. Give us examples. Show us real world stuff, how this works. Let me show it to you. Come on, let's go. Here we go. So these are real world scenarios that my office and I have closed. So John and Tara currently own a home valued at $625,000 with an existing mortgage on the property for 440 grand. They want to go and add a garden suite for 300K, and they expect that it will generate around $2,300 a month in rental income. We got them an as complete appraisal with providing their drawings and the construction budget and everything up front to get predetermined. And we got an as complete value of 925 grand. This
Now,
allowing, sorry?
now, Mike, sorry to jump in that part because I know a lot of people get tripped up on, like, well, that's a lot of work, Mike. I don't know how to do all that. I don't know how to do construction, but that's what Visture takes care of. Like, we take care of all that, including the drawings, all that stuff. That's all done for you, if you will.
100%, 100%. So now we got them pre-qualified upfront off that new as complete value for a new mortgage of 740,000, which is basically an 80% loan to value of that 925. So the way that the structure now works and starts to move forward, where the domino pieces start to fall into place, is how do I access this money? How do I do this? When do draws come? How do I get this capital to get this up and running? So I will walk you through the first step. John and Tara will then get $440,000 by the financier to pay off their existing mortgage, cover any penalties, costs to pay it out. They contribute their first 15%. Remember, I said 15% of the budget, 45 grand in this case, to get the project up and running. I like to say get the skin in the game. This gets the construction up and running until we run out of our capital. And then you call up Mike and his team. Mike, we're done. We're running out of money. Let's get to the first draw. That's what that first money is used for. Now, once the renovations are finished, mortgage is converted, interest only to a normal mortgage, and it was already locked in. I already have the rates already secured for you. So that's how this program works, but I will kick it up a little bit further here. Here is how the money and the draws and you getting access to this capital really breaks down. And again, simple illustrative numbers and all of that just for an exercise. They had that 440 mortgage, so we had that paid out. Now it's carried at an interest-only payment. You use their 15% of their construction budget of their own money to get the project up and running. They get it to a certain percentage completion. We start to get to draw one. In this case, 75 grand. Use that money. We're done with it. Next 75 grand. So on and so forth. Now, once the home is fully completed and it's done, boom, seamless transition of everything into a traditional mortgage at best rate over a 30-year amortization, and you are done. I have another example. Actually, let's stay on this. Current property value, $625, post-renovation, $925. Existing mortgage, they're living in the property. There's no rental income. This is their carrying cost, $26.83 a month. By going and adding this ADU to the property, they're effectively dropping their monthly carrying cost over $1,300 a month just by adding that rent. But here is the big thing that people forget. Oh, wow, this is amazing. This is game changing. What about that forced depreciation? What about that forced new value that is compounding over time while still having someone eat away at your mortgage payment and your principal pay down? It's a game changer. This is a very small scale approach. That's why JG and I really want to harp. You don't have to go big or go home when you have to go add multiple units. They can be as simple as a duplex conversion or a single family home and adding it to an ADU. Don't get me wrong. If we have bigger dreams, goals, and aspirations, I absolutely encourage to go look at the triplex and the fourplex route of here, just because value capital appreciation and rental income is tenfold the more units you do. JG, you want to jump in anything before I go to my next one?
Well, the only thing I want to jump in, Mike, is just to bring people back to what you just said, because in this example, a lot of people, some people, all they see is, but Mike, my mortgage went from this to that. Like my mortgage went, now I'm paying $3,600 a month, and they think it's costing them more money. Right there's the example. You went from 26.83 to 35.99 in monthly payments, and people think, oh, it's costing me more money. No, no, no. Your effective payment actually dropped in half, and not to mention, as you said, you're now compounding your house value at 2% or 3% or 4% or 5%, whatever it is per year. But you're not compounding on 625, you're compounding on 925. And that's where the real wealth comes in.
Absolutely, without a doubt. Now, the next example that I have here is Boris and Ingrid. They're purchasing in an investment property for 500 grand. They have 20% down, which is the minimum requirement when you go buy an investment property. And they also want to go and add a garden suite to the property. And the cost of that build is 250,000. After running their application, we provided them with the as complete appraisal, which came back at 812. So instead of them going to just buy a regular single family investment home worth 500 grand with the rent that it's going to generate, they are now closing on a property that will add additional rental income, add another unit, and now forced appreciated that value of that property to 812,500. Now, Based on this, they were approved for a total mortgage of 650, 80% of the future value. After their closing date of their new home, Boris and Ingrid will get a $400,000, 80% of the home price needed to complete their purchase. That's their first initial draw that they are given. Once it is time to start the construction, clients will use that 15% of that projected construction budget cost to get the project up and running. Once that's used, we'll get to the draw structure, continue to the build. And then once it's completed, same transition out of the interest only payments, out of the draw structures of the construction loan, all into a seamless new Schedule A bank light rate mortgage, 30-year amortization. So let me break this down for you a little bit further. Here's how this would go. 400K initial loan, interest only. Use that 15% to get the construction budget going. And now you're getting your draws. Once you get to your draws, you have a carrying cost of an interest only payment. You have to remember, guys, there is cost and money involved here, but you're using someone else, a financier, a lender's money to facilitate this project. Ending off in an end result of a 439 5-year fixed term with a new mortgage of 650 over 30 years. Come on, next slide. Let's go. Here's the breakdown. Pre-renovation, if they were to just go buy that house, they were going to pay $500,000, put 20% down, which achieved the $400K mortgage. They were going to maybe generate $2,100 of rent on that $500,000 single family home. Mortgage payments $1,991 a month. After property taxes, your insurance and expenses, they're cash flow negative. They're literally were going to go and buy a property, and the end result was they were going to lose money on a monthly basis. With my build-up program, you have now forced appreciated the property post-renovation of $812,000. Yes, to JG's point, you are now getting a bigger mortgage of $650, but now you are getting a rental income on those two units of $4,500 a month. New mortgage payment has increased to $3,236. Property taxes, insurance, expenses, you are now in the cash flow positive state. From being negative, you are now positive. You have created cash flow. That is a game changer, ladies and gentlemen. And that is kind of the solution here to making dreams come to reality, because this program is real. I do it every day for clients all across Canada. This is a real thing. If you need anything, you let me know. And I'm sure JG can help assist, build a game plan for you if it's on existing real estate or on something you want to go out and acquire and do this on. We are a team here. We're here to help you and guide you to the promised land. And what was your line at the beginning? I love that. Enrich people in real estate.
Yeah, enrich people's lives with real estate.
Yeah,
That's our mission at Visture. Mike, I really appreciate it. I want to dig into a couple of things if you got a bit of time with me.
sure.
You know, I want to show another analysis. I'm going to show this after, but I think one of the things that's going through people's mind, there's no doubt about it, is, and you said it a while ago, this is just too good to be true. I mean, I personally, Mike, I've been doing this for 15 years. I've been using this exact tactic strategy. I've been doing this with my own portfolio. You got a peek behind the curtain and saw my portfolio. I've been doing this for 15 years, but it used to be complicated to do, and you needed to have like zoning people, and you needed to have a team to do this, but not anymore. Since the new laws that Doug Ford put into place, that as of right, you're allowed 3 units on any piece of land in Ontario. That changed the game for everybody. Now anybody can do it. So help people understand, why is this not like, people are thinking this is just too good to be true, Mike.
Well, the truth of the matter is, it really is. It's not that it's too good to be true. It's the general public and people don't know that this is available to them because, in all fairness, and I mean this respectfully, if you were to go walk into your bank or go talk to your average mortgage broker or whoever it is, people be like, what the hell are you talking about? Purchase plus improvement? Oh, do you have the cash? Oh, we're gonna maybe refinance your house, or we're taking you a private lender for construction financing to do this. It's because this is something that is only exclusive, that my office and my team and my partners have created, that we have the track record and the reputation to be able to bring this to people into Canada, to say this is available to them. And like I said at the beginning, I really need to harp on this. The traditional way of financing these things is private lenders and very expensive rates and fees, hard money, unless you have the cash or the capital, or you can qualify to pluck equity out of your property to do this. And like I say to people, that is always my strategy when a client comes to me. Do you have the money? Yes or no? My next option is, can we go get friends and family? Can we get our family's money to do this? Or can we access equity in your home? Well, the average and the majority of Canadians can't, right? Maybe they can muster up a little bit, but they're not getting a couple $100,000 to do this. This
Sure.
fills that gap in that market. And to your point, Doug Ford and the municipalities and the different rules, this is something that we kind of already foresaw happening in the market, and why we went to all the banks and the lenders and our financiers in scoured Canada saying, this is coming. Like, at the end of the day, we need to bring solutions to Canadians. We're on every month with the banks and economists, and they ask us what can be better. Obviously, we want lower rates. Obviously, loosen up financing options and all of that. That's a given. But it's like, you need these programs for people. You can't go promote and stimulate the market and real estate in our country and our economy, but meanwhile, you handcuff everyone and you don't make it realistic. This is realistic. But not only do you need the financing people, you need JG and people like that that understand the process of dealing with the city zoning, permits, potential, doing all of this and doing it efficiently in a cost-effective way.
Now, Michael, I'm going to show this example in a second because your case studies kind of inspired me, and I just submitted this report to a client yesterday, and I'm not going to show their private details, but I want to show because the results are just incredible for people. I mean, this is literally a wealth engine for people. This is like that's why I say you turn your backyard into cash because you're literally creating wealth from dirt, and you're able to do it effectively, efficiently. But I have one question, Michael. How important is it? From my perspective, I can't do my job unless I can help my clients get the money. That's why you're here. But how important is it to have a builder like Visture on your team? You know what? How is that part of the game plan? Do the lenders even care, or can you just hire Chuck in a truck and like, here, go for it, build me something?
Great, great question. And the answer is yes. The importance of who the builder and the contractors are doing the work is massive. It is huge, and that is fully taken into account. Yes, they are looking at you as the applicant and the future value of the budget, but the trust of the factor that we are not going to go off the beaten path of that budget and have no surprises and have an expected time frame, value, drawings, everything from the potential rents is massive. So, yes, the financing is hugely important, but the people that you are doing the project and the construction with is just equally as important. I'm not going to go and say to you, I'm more important than you, JG. It is a collective effort to get you to the finish line. It is huge, right? But I do
Yeah.
want to mention one thing that I just wanted to say in the presentation, and I keep going back to, and I know, JG, you've been around the block, you've done a million, you have a million properties, you've done this, you know the ins and outs. Even how we sparked our relationship was connection through other people. And we talked about this, and you're like, Mike, are you serious? Like, is this real? And I'm like, it is absolutely real. So when I say, if you don't have the cash or the equity in this to finance it, and you're typically going hard money, on average, bare minimum, construction loans and borrowing money. Forget needing 35% down of the construction budget and our program only 15. On average, rates are 9, 10, 11, 12% fees on every draw, private loans. What if I told you, I shouldn't say what if, it's a fact. Your draw structure and your interest only payments on the draws and borrowing this money is at 6.09% interest only
Wow.
carrying costs. That
That's
is almost
crazy.
equivalent to a home equity line of credit product,
That's crazy. That's really
right?
great. That's really great. So I love it, Mike, and I think that that you bring some really great points. Let me show this here. I'm going to show this case study because you inspired me. So this is a comparison right here, a live comparison of this particular client. The difference between their current duplex and what happens to their property once we add an ADU. So you can see that in this particular case, the ADU is $322,000 to build, which, by the way, on average, an ADU costs somewhere between 250 and 300,000, depending on the size plus HST. In this case, we get an HST rebate, so the effective cost is only $297,000. They're going to generate, they're going to go from 4,100 a month in rent to 6,450 a month in rent. Again, this is just a normal person, just like you, just like me. This is not a multi-gazillionaire investor. This is just a regular person. Look at their cash flow, Mike. And you pointed this in your example. Right now, they're making $200 a month. Let's be clear. If anything happens in the market, if any one little thing happens to their property, they're not making money that month. They're going from a $200 a month up to almost $1,200 a month. That is a game changer every single month. So over the course of time, and look at the value of their property. It's currently worth 761,000. It's going up to 1.025 million. And by the way, if you guys are thinking, JG, these are wishful thinking. Maybe I could have got that for a property like 3 years ago, but I can't get that nowadays. Listen, I'm getting appraisals as of 10 days ago for $1.025 million. I'm only giving you the most realistic numbers I can, which are the numbers I get from the appraisers day in and day out, because we appraise them essentially every week. Now, check this out. This is what their backyard looks like now. Check this out, Mike. Boom. Look at that
Beautiful.
concept.
Beautiful.
Look at that. Right? Incredible. That's a 750 square foot coach home. Here's the internal layout of it. Beautiful open concept kitchen, living, dining, two big bedrooms, nice bathroom with two sinks. It's unreal. But check this out. This is what I want to show people. Over the course of 10 years, Mike, 10 years, here's the money they're going to make. It's a $661,000 wealth gain for them over the course of 10 years. And at the end of the day, they're using the bank's money to do it. And you're going to go get that. You're going to allow them to go get that money. And this is what you were saying a while ago, Mike. If they don't do this, their property appreciates like this. If they do this, look at the appreciation of their property. It is a several $100,000 difference over the course of time. And let's be honest, we don't buy real estate for 6 months or 1 year or 3 years. We buy real estate for 5, 10, 15, 20, 30, 40, 50 years. So this makes a massive, massive difference. So I just wanted to kind of end on that note, Mike. And I guess I'll say one last thing, and I just wanted to find out from you what, if somebody's sitting there, Michael, and they're thinking, these two young bucks, you and I are about the same age, Michael. These two young bucks, they're good looking cats, obviously, but they can do it. They're young. They got the energy. They can do it. I don't know. Can I do it? I'm younger. I'm older. I'm better looking. I'm not as good looking. Whatever excuse they have in their mind. What do you say to people that are sitting on the sidelines thinking, maybe I can, maybe I can't? What do you say to those people, Michael?
Hey man, if you don't take a push and try to better yourself or create equity or create future value, you're gonna be just left behind. What's the biggest hedge against inflation? What's going on in the world right now? You got to own assets. You got to own assets to hedge against inflation. Well, we are literally giving you a blueprint how you can increase value of your home, increase rent, but you have to position yourself with the right team and the know-how. The hardest part is making the decision you want to do it. What's the hardest? What's the next hardest part? Reaching out. There's no cost to reaching out to me and my team. Let's go through an assessment. Once we're done there, let's work with JG and Visture to put a plan in place. And next thing you know, what you thought was a dream becomes a reality. This is real. This is not no far-fetched. If I can curse on this, I feel bad, but I have to do it. This isn't friggin' bullshit. This is real. I'm very passionate in this because number one, this program alone is a game changer for Canadians, and Canadians are taking advantage of it now. This is something that is real. JG has built the whole business on this. And now throw in Michael and Better Mortgage Select of getting even optimal ways to do this. This is a game changer for everyone. So,
Yeah,
yes, you
but
can't
that's
stay still.
I was going to say the same thing, Michael. A lot of people think this is, and I think this is, I think you said it at one point in your life, no doubt. I know I've said it's like, well, that can happen to them, but it can't happen to me. My argument is how do you know? Make the phone call, get in touch with us, text me, email me, call me. Let's look at your property, have a chat with Mike. Michael, bring him in and have an analysis. You know what? The worst is going to happen. We're going to say, listen, it doesn't really work for your property. Okay, nothing lost. But what if it does work? That's what I say. What if it does work? In this person's case, we're talking about $661,000 difference. That's over just the course of 10 years. What about 15? What about 20? What about 30? I mean, it's an absolute wealth game changer. And that's only, by the way, this is only on one property. What if you did it twice? What if you did it three times? I mean, this is the difference. And this is why I believe that we enrich lives through real estate. And everyone has the ability. I was on a podcast the other day and someone asked me, I said, JG, what do you think people need to do in order to protect themselves against inflation, against where this economy is going? I said, it's very simple. You're either a consumer of the economy or you're an owner of the economy. And if you own assets, and everyone here owns assets, if you're watching this, it's because you probably own a home, you have an asset, but we got to make it better. And this is how you do it. So, Michael, I think this has been absolutely awesome. I'll give you the final words, but I really appreciate your time. I really appreciate the partnership with Better Mortgage Select. I think you guys do an exceptional job. You got great, unique programs. You guys are top notch, and there's no better team out there. So, Michael, last words to you, bud.
Yeah, guys, I would just say for everyone, thank you again, JG, for having me. I'm so glad that we connected and doing this and continue to do more. Probably as we progress, we'll do more of these for sure. But yeah, guys, don't hesitate to reach out. Just to echo exactly what JG said again, and to finish off what I said is, even if this is remotely just a thought in your head, act on it, because you never know what the future potential and what can be done here. You have people that I literally wake up every day. My whole sole purpose in life is to provide options and find ways to get you one step closer to financial freedom, or to create better options for you and your family and your loved ones. That's literally what I do. That's how I got into the industry. And your money needs to work with you one way or another to get ahead. And I am showing you a blueprint of how you can use very little of your money to accomplish a big project and a big goal. And with JG included, you got two experts in the room right here that are looking to help guide you to the promised land. And that's what we're here for.
Michael, thank you so much, folks. Get in touch with Michael. He's got an incredible website. Get in touch with him. If you want Visture to look at your property, call us, text us 705-998-2017. Email us, go to visture.ca. Tons of case studies, tons of examples, tons of opportunities. But get involved. We're doing tours, Michael, you and I, where we actually go into these properties and show people. Folks, join one of those. Come meet us, check it out. And we'll go take a look at your at Visture. We often go do site visits. We go take a look. We go show you whether it's possible or not. Michael, I appreciate your time. You've been absolutely awesome and amazing. Thank you so much. Thank you for everything that you do. Because, like I said,
Absolutely.
if it wasn't for you and your ability to get these amazing programs, we wouldn't be able to do what we do. So thank you, my man, for everything
My
that you do.
pleasure.
I really appreciate it.
Thank you, JG. And we will do this again soon. Thank you, man. Have a great evening.
Have a great day, guys. Bye bye.